Hi, this is Gaurav Verma from 21G Investments. 21G Dark Horse Quant Fund is basically for investors who plan to invest their money in the leading sector in the current bull or bear market. So as we know, in bull market, let's say out of 20 to 25 sectors, 7-8 sectors will be in bull market, which will be taking the index higher at much higher speed. But in bear market, out of 20-25 sectors, only 2-3 sectors stocks would be doing well. That's why we see most of the index prices going down. So in those time too, when market is doing badly and when it's doing well, we aim to invest our money in the sectors that is leading currently. So in every market scenario, first we pick up the trending sectors. As you know, even when markets are doing badly, would still be doing well, and we aim to find that sector. In that, we pick up the leading stocks. Let's say a sector has 20 stocks, 7-8 stocks that would be leading in that will pick up that, and they are basically mid or small because they become multi-baggers for the bull run, and that's where the big generational wealth is made. By capturing that, we focus on the right sectors even when markets are doing badly, and we have the momentum that helps us. Even if markets do well for 2-3 months in bear market, we capture most of the momentum in that. So it's a rule-based selection. We go from top-down approach of selecting the sector, then in stocks, and then go down to the strongest ones. So it's a leadership one because the strongest ones would be added first. And because we know in within sector, like let's say there are 10 stocks, 4-5 would be in a very strong bull market and other would be just little laggards. So we plan to capture the strongest stocks, and it's data driven. So no biasing on a particular stock, but if a stock is doing really well, we aim for that first, then a laggard. This strategy is really useful when market is in bear trend, because if we are able to protect our money in bad times, and let's say that sector does well, we'll able to generate returns in that while most of the stocks in the markets are going down. That's where we get real alpha, and that's what we try to do in that. So we plan to invest in that, and if any of them sectors, let's say we picked up 2 sectors that are really strong in this bear market too, and if any of them gets weak, we reduce the exposure in that, or if we get a replacement, we add, or we go in cash. And that's one of the reasons we have been able to capture most of the up move and protect our money when the markets were really bad. So going on cash has been one of the strongest things that could help protect our money in bad time. So this part, like being in the strongest one, because even if market has to go down, it has to do well in very few stocks. So this part strategy helps us, removes the emotional decision making, and it's a disciplined approach. So we never get biased with short-term up moves and down moves. So it's basically very good for long-term investors who plan to create wealth while protecting downside by being in cash or in strongest sectors in the up move. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSE and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.